Welcome to episode 8 of the Compass. We're now back home, back from Beaver Creek in Denver. I thought we'd give you a little bit of a conference recap. I'm Derek Macpherson, Executive Chairman of Olive Resource Capital, and with me, as always, is Sam Pelaez, President, CEO, and CIO of Olive. I guess now that we're back home and recovering from what was 9 days of being up in the mountains and at altitude, I guess we had a whole day to reflect on it. We're recording this on Friday, September 20th, so post Fed, post conferences. Do you want to maybe Sam start with some high level themes, some high level takeaways from the trip?
Yeah, so I think for us the key thing was to revalidate some of our existing picks, and then ideally identify a few other new ideas or opportunities for next year. I think we achieved both, and the third one was to get a recap from the majors. We sat through the presentations to try to understand what's the underlying theme across the large cap universe. What are they thinking? Where are they looking to allocate capital? As you know, the directives change. Sometimes it's return of capital, sometimes it's growth. So we wanted to see what their explicit message was on that front. And I think fourth is always the serendipity of being around all these characters and just crossing paths with them and hearing rumors and conversations and what comes out of that.
Yeah, I think there was. I don't know if I would say there was more money at. Definitely, there was more money at Colorado Springs versus for the Denver Gold Forum, or I guess Gold Forum Americas as they now call it, versus Beaver Creek. But I think the one of the underlying themes that we've been talking about is that there's companies that have to buy stuff, and I think that continues to be the theme. I don't think that hasn't changed for us at all, and I think that's where, in the near term, that's probably where there's some extra torque in the market, and that's one of the things that attracts investors in is that, even if it's a 30% premium, it's a quick 30% premium if you get the timing right. So I think that's something that reinforced with us. We talked a little bit about what we saw at Beaver Creek. Maybe let's talk about a little bit what we saw at Colorado Springs or at the Gold Forum Americas. I think the big, one of the things that we always do is sit through the majors presentations and kind of get a theme. I got a couple notes on them, but Sam, I'll let you go first and on what some of the things that stood out from the large cap producers as they presented.
Yeah, so if you start with the two big ones, Barrick and Newmont, Newmont very explicitly stated they're in that divestiture phase. Obviously, they bought Newcrest, and Goldcorp over the past couple of years. So there's been this bloating up of the portfolio. They've run through it. They've decided what's non-core to them. That's on the block. 1.5 of the assets got sold last week in Australia. The other I think is three. The other three in Canada, which are up for sale, should be the process should be completed Q4 or Q1. So I don't see them in the M&A front. They're kind of in the sort of portfolio optimization and cost optimization. So that was interesting. Barrick remains focused on their copper growth. So whereas that's Reko Diq and Lumwana, that was the majority of the presentation. So I don't think they're going to be active unless there's something particularly attractive to them.
I just before you move on from Barrick, and I want to make a point there. I think that Barrick and Bristow came off as sort of he was kind of lecturing the industry on M&A and not
Right.
and deals that had been done. And I mean, it is supposition or I guess inferred on our part, but they missed out on some really, really big deals over the course of the last where we knew they were where we believed and we had heard that they were bidders.
Great Bear.
In particular, Great Bear. That one was a little bit obvious. I mean, they went and did joint venture deals with everybody around Dixie before they actually concluded a deal with Dixie or with Great Bear. And so, I think that there was a bit of, I don't know if I want to say jealousy, but I think the ego was it on full display. You but yeah, he is. They are really focused on copper. I think I almost would describe it as. I would disagree a little bit that they might not buy something. I almost describe it as a poker player that's on tilt. Um, that's the way it came across, right? Someone who's ready to go out and buy something, but we'll see. There's no. It might be on the copper theme still, as you noted, but it strikes me that he was basically lecturing the market about bad M&A, which really felt like he was just. It just really felt like he was lecturing the market on bad M&A, when in reality, we know he had missed on some things that he probably wanted to buy.
But even on the Randgold days, the his filtering for projects was so aggressive. I think it was $1,000 all in sustaining, and something like 20% IRR at $1,000. At the time, gold was probably 14 or 1500. Um, he puts the bar so low that it's going to be difficult, especially in a market like this, that he doesn't face any competition that will outbid that type of stringent rules that he set for himself. But I do think what he's looking for, he's certainly looking at copper. They published the Lumwana study last week. That's a very interesting project. It's in the right part of the world. We like that Samian belt. Reko Diq didn't spend much time on it. It's obviously somewhat political. I think Barry could use an acquisition, but he's not gonna. I don't see them buying a single asset. Maybe like I was saying, like First Quantum was the perfect fit for them, but then Pascal founder passed away. Then they had the Cobre Panama issue, so that vicissitudes of the market have thrown it out of the, I think, realm of possibility for now. So we'll see what happens, but I don't see them being particularly active on a single asset basis type thing, but I may be wrong.
Well, and single assets doesn't really move the needle for them either, right? That's the other big challenge that they have.
I was gonna go to Agnico next, just because I think the Agnico presentation sets the ground for a lot of other things, right? Two things struck me out of the presentation. One is it was virtually the exact same presentation as last year, which, if you're a generalist investor, that's fantastic. Nothing's changed, just marginal improvements here and there, sinking a second shaft on Malartic. So those, in the realm of what they're producing now, those are marginal improvements. They're not transformational deals. So I think that's very positive for the generalist. But the second one was that they keep referring to these production centers. And I guess that's what happens when you get to that scale.
No, what I was going to say is that when you talk about improvements on their assets, right? They don't have to go to grow their production base and to improve their cost base and lower and generate additional free cash flow. They don't have to go out and buy stuff, right? They made Detour better. They increased production. They drilled it off. They're making Malartic better. They increased production. They drilled it off. They have other stuff within their portfolio that they can feed in. And I think that was going to your point on the production centers, that they're building around areas, right? They're building around regions.
Yeah, so the economies of scale and the kind of like benefits cost-wise of having this sort of larger operations around production centers, they quite reinforce that that's the way they want to grow. That's the way they want to move forward, is just think about clusters and production centers. So that, I think that's one of the key themes now that to keep in mind is, if you have a project that appeals to a major, it doesn't have to just have scale. It has to have like opportunities regionally, right? So they spend $1 billion on the infrastructure on surface, and you have the deposit there, but then there has to be optionality along strike or at depth for them to build this sort of like 30 to 50 year operation where they can depreciate that capex and then continue to earn the returns for the foreseeable future. That's been the Agnico model. When you think about La Ronde, before you used to spend all this time on La Ronde, now it just barely it's just barely mentioned on the side note. But La Ronde has been there for 3 generations now, and it's going to continue for some time longer. So those are the types of assets that they're looking for. And that's something that struck me, is we need to start thinking about production centers for the majors, not so much about specific mines. And that was actually something that, when you think about Northern Star, the presentation is starting to look a little bit like that, right? Like they have their Kalgoorlie operations, they have their other operations, they have the Pogo in Alaska, but they're starting to sort of like adjust to that model where you have like production centers. and that carry all these benefits. So that's something that it was mentioned last year, but it was not till this year that it kind of struck me that that's the future for large operations.
I guess a couple things there. First, on Agnico, that probably means that from an M&A perspective, they're going to be really focused around their existing assets, and feed for that money that they're spending on those, on Malartic, on Detour Lake, things like that. The second thing, on the Northern Star, I really liked the slide they had in their deck, which showed the capital returned, what they paid for the asset. And this was actually, I think, is important. They put what they paid for the asset and then the free cash flow from that asset over time. And with the exception of maybe Pogo, which has just started to sort of hit its stride, they've delivered multiples of free cash flow from the assets from what they originally invested and acquired.
So
It's almost a slide that justifies further M&A. Hey, look what we did.
yeah, and like the John D one, they're making back the initial capex they paid for it. They're making that amount back in free cash flow every quarter, not every year, every quarter. It's exceptional. And obviously Pogo's behind, but they have optimized it. It's now kind of on the ramp up, so they're trying to get to that similar type of return. But like to your point, it does justify the smart kind of M&A.
The other one that jumped out for me, obviously we're shareholders, so was paying close attention, was Anglo. They had just announced the Centamin transaction. Obviously there was a limit to what they could say and what they could do it, but one of the things that jumped out for me from that presentation is that their cash costs are down 4% over the last 4 years. That's not something that you see in every major. They've spent a long time working to transform that company, and now they're starting to reap the benefits, and they have the cash flow to go out and do some M&A and grow the business. Got to say, I was a little surprised by them acquiring Centamin. For a company that was reducing its jurisdictional risk, seems to be increasing it again. But it certainly is. It certainly was a good presentation, and really reaffirmed why we like the assets.
So it's now the fourth largest gold miner in the world, and it has a silicon project in early to maybe mid-stage development, which will be transformational. Obviously, we don't expect being. I think that could be a production center, like we were talking about production centers. Ultimately, it could turn out to be 1 million ounces a year out of the entire package. We'll see. Obviously, not initially, but I think the optimization will try to get it there. Out of those four, the top four, on a sort of like price and evaluation basis, that's the one we like the most. We like that they have been aggressive for the last 24, 30 months since the new CEO came in. And it looks like a completely different company, frankly. The deal the deal they're doing with Goldfields, where they're putting their two operations together, it goes again to the whole district scale production center kind of thing. So I think there'll be some cost synergies there that we're not seeing yet. The deal has not been approved by the Ghanaian government, but something that we definitely continue to like.
And I don't think that style of deal, I don't think, is going to go away. That style of putting together, two companies working together in an area, with the sheer challenges in permitting, especially new tailings facilities and new mills. I got to think that that's going to be a theme going forward, where you're going to see, critical mass being generated by two projects that are next to each other and sharing infrastructure.
That's indication of risk is very common in oil and gas, especially offshore where the projects are very large. And
right.
We've seen it in like the Nevada operations that Newmont and Barrick share, right? That's a kind of syndication of that, of risk and opportunity. So I think, as we get into these clusters and production centers, it may become more likely that we have this type of structures. You're right.
The one thing I want to mention, and this wasn't in the major section, it was in the royalty section, which I sat through as well, that jumped out at me and was kind of, it surprised me, and I mean, obviously, we don't follow large cap royalties that closely, so it wasn't. It's probably been this way for a while, but Wheat Precious Metals is larger than Franco Nevada. Franco Nevada has taken a lot of pride at being the sort of the class of the royalty space and the largest one by far. Obviously, that relates a little bit probably to the First Quantum challenges of Cobre Panama and their royalty there. It's about 20% of their NAV. Not that that group strikes me as someone who will go out and buy something just because they're smaller, but that group strikes me as someone who might go out and buy something just because they're smaller. There's always been a lot of talk about the consolidation of those mid-tier royalty companies, and I wonder if Franco will be a little more eager to pay up now that they're sort of they've fallen below Wheaton, but we'll see. I think that's pure speculation. I don't think we're putting on a position based on that.
But this all comes back to M&A, and the one thing I did want to bring in that kind of I'll put it together with the production centers from Agnico, but the B2 presentation was very interesting. They were obviously talking about their acquisition of Sabina, and the key thing that Clive mentioned was that when they bought the asset, it wasn't the opportune time from a B2 perspective to buy it. But he felt compelled to execute on it at the time because they were about to start drawing capital from their project finance facilities. And if they had done that, they would have saddled the project with those project finance facilities that are suboptimal from the perspective of a producer that has lower, access to lower cost of capital. So that sort of led me to thinking, okay, what kind of opportunities do we see out there that are coming close to that stage where they're about to start drawing or committing to certain types of financing that could be suboptimal when seen from the angle or perspective of, say, an Agnico Eagle or a B2Gold that have access to better sources of capital. And I think that's something that I may have underestimated in the past, where I always thought it was more on the timing of the buyer determined the success of the M&A transaction rather than the situation of the potential seller or acquiree at the time of committing to the financing terms. So when you marry the two, projects that are getting to that situation and projects that could eventually have a scale to become production centers, I think that's where you go and park yourself in terms of what gets taken on next. We clearly saw that with Osisko and Goldfields, right? They had a JV, they have a JV with Bonterra. It's obviously a pretty sizable land package, multiple deposits, obviously Windfall being the largest one, but multiple deposits across it that over time it will become a production center.
The big question is with those, though, right? Just because it's effectively closeology. Bonterra, I guess now Goldfields is not closeology. It's the same geology, just slightly different. The question always is when, right? And when do those companies need to do it? But I think you're right. I think there's that theme of production centers stood out. I guess that mentioning B2 and then mentioning the theme of production centers, I guess the nice transition into mid tiers, and one that I probably hadn't done a deep dive on in a while, which was when I sat through the presentation, which was Alamos, and they've really executed, and I think that John McCluskey took some heat for doing some transactions in the bottom of the market, which turns out as a producer that's generating cash flow, you're supposed to do, taking advantage of that, and then has really transformed that company. In particular, I was impressed. I continue to be impressed with the Island Gold and the grade that's there, the scale of it, and frankly the acquisition of Mangino through Argonaut was transformational. It is, from a valuation perspective, continues to be at the upper bounds, and maybe not something we're jumping out to buy, but certainly a group that's executed, and so one I think I would want to watch to see if there's a pullback for a inappropriate reason you would go take a run at.
Yeah, this story is that, and I agree with your comments. We're both there when Arico was taken out when they bought Island. And I think more than the conversation around what didn't make sense, it was that the question was like he was always overpaying.
Mm-hmm.
I think in hindsight, if you look back at it, like he's made that money multiple times over in those assets. So kudos to the team there. The thing when these companies trade at these multiples, because clearly they've been executing very well, is that you're taking some more risk at that premium valuation. So I think for me, and I don't want to say us, but for me, you wait till they have one bad quarter, and then everybody starts getting concerned that they're going to lose the premium multiple, and then you start picking it up. Right? There's
Yeah.
inevitably going to be a quarter where something doesn't go right, and for
Or
whatever
there's a
reason,
delay.
it's a mine. It's mines, right? Something always goes wrong. It even happened to Agnico back in the day. When you remember the gold days, that was a big overreaction to the downside that was fixed, as we all know, and now they've recovered and uh, you know regained their premium multiple, deservedly so.
And I guess along that same theme, we were talking about B2 just earlier, but it's worth probably mentioning that on B2, they kind of put the bad news out last week. That they've had to go. They increased the capex at Goose, and they've had and they got the deal done in Mali, and so that news is sort of all the bad news is sort of out of the way on that name. And B2 are good builders of mines, so I wouldn't expect a second capex increase. So that was an interesting one. I guess maybe one that a name that I am not in love with or don't love, but you continue to like is Centra. Maybe kind of explain that one.
So Centera, after the loss of Kumtor, it looks very different, and effectively what it looks like is a balance sheet with a lot of cash. Mount Milligan, which is was let's call it a marginal asset when he had the Royal Gold. I think it was a stream. I can't remember his stream of royalty. They renegotiated that in exchange for some investment development plans for the asset. At this market, on these prices, I think Mount Milligan makes a lot of money. So strong balance sheet, lots of money, and then they have this moly business that, frankly, shouldn't be in a public company. Nobody understands it. Freeport has a moly business. They never mention it. It confuses people. They've just published a study on what the restart of their moly project and the continued operation of the plant that they have in operation, what that looks like. It looks like a pretty good project. I think it's an NPV of 600 million. I forget right now off the top of my head. Requires a couple $100 million in investment. And I think the thread is that they're going to go ahead and build it or restart the mine and optimize the plant. But frankly, I think they just put that study together so that they can put it on the market and say, well, the study says it's worth this. Give me a bid that's reasonable in that ballpark, and it's yours. That's my supposition. I don't know that for a fact. And if that happens, which could happen soon, and moly prices are on an uptrend, you could have a company that has $1.5 or $2 billion in liquidity and Mount Milligan, and it's literally think about it as the best shell you'll ever find in your life, right? They'll be first pick for any kind of project because they can pay cash. So that's part one. Part two is I quite like the CEO. I've never met him personally, but I've seen him present a few times, and I think that he's now in the job for a year and a bit. Last year, he articulated the vision, but he was still kind of like uncertain how it was going to play out. This year, I think he gave an exceptional. It wasn't a presentation; it was a fireside chat. I think he did a fantastic job outlining how complex all of these moving parts are, but how it all fits together into a plan going forward for Centera. So I think it's kind of like a outlier, dark horse, if you will. It doesn't have the torque to commodity prices right now because of all the cash in the balance sheet, but I like the way they articulate the vision, and they stand first place to make a pretty interesting acquisition or development plan here. So I'm curious to see how that goes next. What happens next?
Yeah, I think that there's certainly on the list of companies who are going to buy things. I guess where we differ on this is that anytime I know that a company's out there, I guess a couple things. Anytime a company's out there that's going to go buy something, I tend to be hesitant. Mining companies, particularly gold companies, aren't noted for making smart M&A, although we've talked about a couple companies that actually have done it. Generally speaking, they're not. Second thing is, and I think this is the other piece is while volley can be profitable in its moments, it is definitely a very deeply cyclical commodity, and so if you're tying up a lot of value in that moly business, then there's probably there's a lot of risks. But moly is doing well right now, and so we'll see. Thought I'd maybe transition to a couple names that we do own that we really like, and I think what I would describe as we like more after. In particular, we were able to sit down with K92 and John Lewins, and uh, this is a story. Initially when they first took over the asset and started producing, I was skeptical because of the PNG risk. I mean, that risk is there, but I think they've demonstrated they can operate in that country. I think the stock's been sort of artificially held down because people don't believe that they're funded. I think there's a financing coming because people don't believe that they're funded to through this next phase of development. We were I don't know, given assurances, but pretty much told that wasn't the case. That especially at $2,500 gold, they had the money to deliver, and so I think those two things are so this is the path to, I think, 250,000 ounces a year this year, and then it's the next phase is 400,000 ounces a year, and really the incremental capex there appears to be mostly just development work to get there, not opening up faces, not really on the mill side.
So last year, it was all about, I think they were about to finish the twin declines last year. That was the biggest push capex wise. And there was this conversation that they were going to need money, et cetera, et cetera. This year, twin declines are done. Expansion continues on track and on plan. And three, now they're talking about what I'm really excited about there is exploration. Because they already have a deposit that takes them to 500,000 ounces a year in, I don't know, 2 or 3 years. I forget the timeline, and what happens after that is they get taken out, they buy something, or they grow in their own land package. So I was really excited to hear about this year, the focus on the exploration potential, because they've been exploring the Cora and the Judd. Now they're going to start exploring these other veins that have been drilled in the past. Obviously, this was a Barrick asset back in the day. And before that, I think somebody else also had it. So there's plenty of work that's been done. They know where these veins are, and they're finally going to be able to put substantial money to it, which also kind of comes back to the point where they're trying to tell you they don't need that money. They're going to put some real money to the exploration game over the next 12 months. And I think that could be another catalyst beyond the funded growth to re-rate the story significantly higher. I mean, when you think about Lundin Gold, $28, I think that equates to about $7 billion in market cap. Whereas K92, with the same type of profile for production, once the expansions are complete, it's between 1.5 and 2 billion. So I think Lundin Gold has done a fantastic job to earn that premium, or to earn that valuation, because they've consistently delivered. They've optimized the recoveries, they've optimized the throughput rate. I think K92 is going to get there. And they're also going to have all this interesting exploration potential that's literally on their own property boundaries. And on top of that, the new mill is not going to be built on top of the existing mill. So if they find some high-grade stuff on this exploration ground, they're going to have the old mill still available to put throughput through it. So this could turn out to be more than 500,000 ounces with the existing capex spend that they've done. I think it's a fantastic story. And like Derek said, we got just the revalidation this year that we're on the right track.
Right. And I guess just for a circle the circle back. What you've just said is that type of company, K92, is one of those companies that fits that theme that we really like, which is funded growth with a team that can execute, but not recognized by the market yet. And so I think that's the opportunity. And I think, I think it's a very attractive entry point here on K92. We're already long and go from there. I guess
Just to
looking at
make
the
sure,
time,
like,
I think
this is not investment advice.
this is not investment advice. Yeah, these are our opinions and talk about what we're potentially doing with Olive's money and our money, but not certainly not investment advice. I think one of the things that we came away, one of the things you always come away with from this is, particularly from the Gold Forum Americas, is who's buying, who are likely buyers. And no one actually, other than B2 one year, no one actually comes out and says, hey, we're going to buy something, right? Because that's, people then assume that that's going to happen. I think that, I've got a short list here and companies I think might buy something in the next year, and with a little bit of FOMO. So I think one of the companies from last year that we talked about was DPM, Dundee Precious Metals. I think they're probably still likely to buy something, particularly since they have a bit of a production gap. Adatepe is going to come offline here. It's going to finish, and so their production is going to drop down below 200,000 ounces a year, and then they're still a ways away on the new asset they discovered, and I forget the name of it now off the top of my head. And if I tried to say it, I'd probably mispronounce it, but that actually looks like a really cool app. So yeah, that's it. But I think that there's a gap in there, and obviously they're going to see production decline. So, I think that they're, something near-term production, I think they would be a buyer of. Another name, obviously Centra, talked about that already. Kinross, looking at their presentation and how their profile is, they've got steady state production until Great Bear, and Great Bear is transformational for them, but I think that there's room to tuck something in between those two things. Great Bear is until 2030, it's 7 years away, and pretty much have a flat to slightly down production profile between here and there. We talked about Northern Star. I think they basically built their presentation to justify that they are going to go buy something. Don't know exactly what that is, but I think there's I don't know how far they get outside of Western Australia after their experience in Alaska and the challenges that they had, not just with the asset, but culturally there. One that you and I haven't even talked about this yet, but one that I think is potentially out there is Bonaventura. Company's actually is doing fairly well, executing, ramping up. I think they might be, in a position to go out and do something strong balance sheet. And then last one I have on my list, and she just mentioned them, is Lundin Gold. It's an absolute cash flow machine. There is no way that they can use the cash that they have and that they're generating efficiently in any way, shape, or form. They have a great asset that they're expanding. They're now exploring the broader land package. They'd really been focused on the mine area. I don't know how much bigger that mine can get. And so other than adding mine life, I think that they're going to need to buy something. However, for jurisdictional purposes with the Lundin Group, they could buy anything anywhere.
I think they have a fantastic opportunity to do something big here. I would add two more. Ramelius, obviously they were a bidder for Carora. They own 20% of Spartan. They're slated to be a buyer out there. And the other one that's not very well known in Canada is Regis. Regis has been historically open cut type miner in Australia. Their growth project just got hit with a significant delay in permitting in New South Wales in Australia. So I think they haven't been net cash for a while. They're net cash now, obviously in preparation for the build out of this McPhillamys project. They're probably going to be out there looking for a project to fill that gap while they resolve the permitting issues, which may take 5 or 10 years. Frankly, that's the words of the CEO, not mine. So we'll see. But I think that was at least 10 companies you and I mentioned. So I think the M&A theme is still alive. Um, and just to recap, we like things that have a high likelihood of being mines from a permitting perspective, scale perspective, grade perspective. And we also like the sort of like the growth stories within the producers. So the K92 example is perfect, right? The going from 100,000 to 500,000 ounces in a few stages, but where most of the capex has already been sunk. I would say Spartan also fits in that category. They're not a producer, but they're using exploration money to do development work. Those are my words, not CEO's words. and
They're putting in twin exploration declines. Doesn't strike me as they're just going to be used for exploration. Just me.
well, yeah, permitting wise, it has to say exploration every time you mention it.
Yeah.
But in reality, they're production declines. So I guess with that, I think this is a longer episode, but certainly warranted based on the amount of material there is to cover. I think next few episodes maybe we'll distill some of these ideas into something more tangible. This was more just of a recap, just to try to mention as much as we could over the course of a half an hour.
Yeah. Well, some of the things that we saw interesting at the conference, right, that stood out to us that were unique, and hopefully we could bring those to you guys. Just as a reminder, any of those companies we mentioned, their presentations are available, but both conferences make the replays available. So, you can go watch and disagree with us or agree with us. But we'll be back next week with, I think, what will be episode 9. If I can count, I'm going to run out of fingers soon, though. So we might have to stop numbering the episodes. So, but anyways, with that, thank you very much. Look forward to your comments and feedback, and we'll see you next week.